Good morning, everybody. Welcome back to the Opportunistic Trader. It's an active day. Right now, we got the Nasdaq underperforming, down about 32 points. S&P is roughly flat. Oil right now is up a little over 1%. And as we've been talking about, it's going to be an active day. We've got the DOE report coming out in about 25 minutes, and then we've got the WASDE report coming out at 12 o'clock. So a lot of commodity news, and of course, we have the storm in the Atlantic getting close to the U.S. So that keeps the commodity markets have a lot of stories going on right now. And so we're joined by Phil Flynn of Price Group and Fox Business contributor. How's it going, Phil?
I'm doing good. I think we're going to be very busy here for the next couple of weeks. I mean, I don't think the impact of not only Hurricane Florence and the other storms that are developing in the Atlantic are going to keep us really hopping, as commodity traders. We got to say a prayer real quickly for people in the mid-Atlantic states, because this is going to be a whopper, and it's going to have a major impact on commodities and everybody's wallet.
Yeah, absolutely. I mean, Larry and I being down in Florida, we know all about the storms and how nasty they can be. But what's the story on the market side? Oil's been bid this week. Is it on part of it having to do with the storm?
I think it's only a small part of it, because if you look at Hurricane Florence singularly, usually that would be a bearish event for the price of oil. The reason is because in North Carolina, there's no major refineries. There's some small refineries. You do have some transportation and pipeline. But the biggest concern after an initial surge in gasoline demand is everybody fills their tank to get out of town. After that, you're going to be looking at a period of demand destruction. The entire cities are going to be shut down. You're not going to see anybody pumping gas. Heck, the power may be out, so you're not going to use gas. So then you would usually think that would be a bearish event. Ultimately, after a storm like that, it becomes bullish down the road, because once you start to rebuild, you're going to need more energy, more oil, more gas, more distillate. So you do get that cycle, but the market's looking beyond that cycle. And I think it's mainly because there's a lot of other bullish factors in the market. I think the price of oil would have been up even if we didn't have the storm. We got an API report last night that showed a huge drawdown in crude oil supplies. You have the impending sanctions on Iran starting to take hold. There's reports right now that even China is stopping buying Iranian oil. And the question is why? That was supposed to be their only customer, basically. And the Chinese may be doing that because they want to use it as a bargaining tool with Donald Trump on the trade war. It could be because they're sending a message to Iran, hey, we're the only game in town. So you're seeing oil go into floating storage. I think people are starting to realize what we said here, I think a couple of weeks ago, is that the loss of Iranian barrels is not going to be made up very easily. And I think the market's waking up to that point. So you have a lot of things in the marketplace right now that are a concern. One negative thing we did hear from OPEC, they're lowering their demand forecast a little bit because of economic uncertainty. But I think they're talking their book a little bit. I don't think they really believe that, but I think it fits in well, if you want to keep your production down and constrained and keep prices high.
Yeah. But also, with the storms coming, it's not like it's going through the Gulf. And I know that you mentioned before that there's a lot of storms that are, it's almost like the fear of, okay, more storms are coming that could come through the Gulf. How much of a disruption will there be? And if anything, wouldn't it be demand, a negative for demand, I'd say, if, people aren't moving around as much over the next few weeks, people aren't using as much energy to kind of offset whatever demand disruption there might be on the East Coast?
Initially, I mean, that's the initial thing that happens. You remember in Texas, Hurricane Harvey, we had a big surge in price, and then we had demand destruction because Houston was underwater. So we saw prices come down for a period of time, but that didn't last. What we saw, of course, is that in the rebuilding phase, we used a lot more oil, and the price of oil eventually went up to $65 a barrel from the 40s and 50s, where it was trading around Hurricane Harvey time. So you did see a significant bounce back in price. So it all depends on your time frame, I think.
Yeah.
I don't think you could look at any one storm and the thing I've learned about trading hurricanes going way back is that every storm is different. You think a lot of times a storm is going to be bearish. It turns out to be bullish. So they all have their own personality. I mean, the concern directly with Florence going into the Carolinas is that it's going to do the most damage we've ever seen before. You are going to see a record amount of demand destruction for electricity. You're going to see demand destruction for oil. You're going to change the face of the coastline probably forever. You're not going to recognize the Carolina coastline when it's all said and done. So that's definitely going to be a situation where you're going to put downward pressure on prices, maybe short term. But if it were just this storm, it would be easier to handicap. I think when you put into the fact that you have more storms developing in the Atlantic, 2 that can be in the Gulf of Mexico next week, I don't think you can keep your eye off that.
Absolutely.
Because that, immediately, and, people are saying, well, why are you pricing in a rally on this storm? It's probably a demand destruction event. And I think if you look at the trading the day before, that's exactly what happened. They rallied and then they sold off, but now they're looking at these other storms. So they're pricing in risk, around. So it's so now then you look at inventories and you're like, oh my goodness, inventories of crude are falling below average. We're going to need a lot of product to rebuild. Where are we going to get it?
So let's talk about today's number. Do you think it's going to be largely ignored because all the other external factors that we were mentioning, whether it be Middle East and storms and things of that nature? Or are people going to take a look at this and this could be a big number coming up in 20 minutes?
I think it's going to be a big number only because the API was a big number, and it's got everybody focused on that. I think it becomes a bigger number because you can't look at it as just a normal number. You have to put this number in the context of what's going to happen next week and the week after. What are we going to see? I mean, this week is going to be probably the last pure number we're going to get for some time. And even this number is going to be adjusted by Tropical Storm Gordon that played into that. So we're going to look at a number that we may lose a substantial amount of oil. We may see a big increase in products like gasoline and diesel. But then we have to be prepared for the fact that maybe next week we're not going to have any production of oil, or it could be shut in. We got to get prepared that exports and imports next week might be shuttered in. And then we have to balance that with the fact that we're going to see some demand destruction. So it's going to be very challenging. So I do think this number could move us. It could break us up to the upper Bollinger Band, which I think is 71.50 on the October. So I think we'd have a real shot to test that if we get a big draw in crude oil. If, on the other hand, we get a surprise to the downside, I think because of all of the external bullish factors, you're definitely in a technical buy the break mode. So I think any bearish number has a lot better chance to be ignored than a bullish number because of all the risk to supply that's ahead of us. Yeah.
Now, what about WASDE report? That's typically a big number today. We actually had Joe Vaclavic talking about it yesterday. Angie Setzer is going to be talking to us after the release. But these ag markets have really been depressed for months and months now. We got corn right now trading about 365. Wheat has come off its highs. It's now at 5.25 about. And soybeans, November soybeans are basically on the dead low of this move. Prior to these numbers, we're at 823 in November beans, which is within 1% of the low for the past few years. Any thoughts on the WASDE numbers later?
I'm going to call it the zombie report because all the oil analysts I'm talking to, most of them are walking around like zombies. It's been, for the traders, it's been kind of a tough year. It's been very bearish. The big talk from the Ag Master and Bill Moore and Jack Scoville and Jerry Goodell, our crack team of grain analysts, that essentially that we are in a situation where we're going to see a big soybean number. But there's not a big story out there. A lot of people are looking for wheat to recover because the wheat crop's probably in pretty bad shape around the globe. That's holding out hope. The oat markets, of course, are doing okay. So I think that has an impact as well. And so I think those are some of the things that we're going to be looking at. I think the other one we have to watch is cotton. The cotton market, of course, is going to be impacted by the tropical storm. So if we get a bullish number on cotton, you can enhance that a little bit because of the potential damage from the storm. Also, soybean and wheat, you're going to have to put that into perspective, because whatever number they're going to give you, you may have to adjust that tomorrow or Thursday after the storm hits land in the Carolinas.
Yeah, I'm actually just bringing up a cotton chart right now. It doesn't look like it's really done a whole lot recently, but like you said, keep an eye on that. And I know you also wanted to talk about the hogs.
Yeah, I mean, the hog market is the story of two markets. Last week we were talking about how bullish hogs were because of the African swine fever that is really spreading around the globe. It started in China recently, this latest bout of this fever. It spread to a lot of countries around Asia, even into Japan. And so there's a big concern that globally that we're going to lose a big part of the hog crop. Initially, the storm coming into North Carolina, which is one of the biggest producers of hogs in the country. In fact, they have probably, according to CME data, about 8% of all of the hogs in the country, or excuse me, 12%, 12.2% of all the hogs in the country. So this is a big debate. The CME put out a report that they say, hey, this storm could be bearish. They think it's going to be bearish because you're going to see a lot of the processing plants get shut down. That means you can't bring hogs to market. That means that people are not going to be buying as much meat because the stores are going to be closed. People aren't going to want to buy perishable foods. They're not going to eat. And so that's going to be potentially bearish. And if the processing plants are shut down for some time, the argument is that the hogs are just going to get bigger and bigger, and prices are going to go lower and lower. The counter argument to that is from some of the hog experts that I've talked that have traded the market for 50 years, is that they're making an assumption that this storm is going to be like previous storms that have hit the area. And the counter argument about that is that this storm could be so prolific that, instead of hogs waiting around to get fat, that they're going to be wiped off the face of the earth. They could be drowning in the streets, as he put it, floating down the streets. So, it's very possible that the storm could lose a big part of the pig crop. And if that happens, of course, is that going to offset the more bearish short-term situation? So this is a big debate in the market. Now, the hog market, of course, yesterday started to buy into the bearish argument because more and more people were putting out that report yesterday. Today, earlier, we were starting to recover in the Octobers, and they are back up today. So I think the argument yesterday was, hey, this is bearish. Now the market's looking at it as a bit more bullish. My gut feeling is I'd favor the bullish side in this story right now, because not only you have the potential loss in North Carolina, you have the potential loss of supply in other parts of the globe due to the swine fever.
All right, so we got about 10 minutes until the DOE number. Can you just give me a breakdown of what I think the expectation is, so I can post it and everybody can be on the lookout?
Yeah, I mean, absolutely. I think if you look at once you can talk about expectations, but they all get rejiggered to
Absolutely.
the API report. So, I mean, basically, you're going to be looking for crude oil to continue the momentum that we're seeing right now going into the report. You want to see a drawdown of over 8 million barrels. It's very possible that we can see that type of number because the EIA and the API have been in line. But let's assume they come in less, okay? I think that let's say it's a 6 million barrel draw or a 5 million barrel draw. You might get oil to pull back, 50 or 60 cents, but that would put it into prime buying support area. So I think your downside is going to be somewhat limited. Look at the distillates. They had a major increase in distillate inventories on the API. So, anything less than 5 million barrels should be supportive for that market, okay? The big picture is coming into the week, supplies were below average. Refiners have been working overtime to get us back up to average. But if we disappoint on that number, if we come in a lot lower than the 5 million barrel increase that we saw in API, then I think that's going to be pretty supportive.
Yeah. Well, it's definitely an interesting story. We got equities are under a little bit of pressure here. NASDAQ, after outperforming yesterday and trading very strong from the opening bell, are weak right now. They're down about 0.75%, really led by a lot of the FANGs are underperforming. At the same time, we have oil outperforming here. Oil is up nearly 2% or so, about 1.5% at 70.38 before the number. It's going to be an interesting day for sure. We got the storms, we got the numbers, a lot of different factors. So Phil, thanks a lot for the help, a lot
you got it.
for all
Thank
the
you,
information.
Sir.
All right, we'll talk to you soon.
Bye-bye now.
Bye.